You did the cover story on Pimco. This morning, you spoke to Bill's wife. What have you learned?
Well, it was really obvious to me when he and I spoke a few months ago that he was very deeply unhappy, and he had been incredibly successful as an investor, but that success brought all sorts of new management problems. His firm got so big and unwieldy that he needed a lot of help to run it. And by his own admission, he's an introvert. He's sort of a dork. He likes to hide behind his screens and look at bond prices. He is not the guy who likes to go around sort of making sure everyone's happy, doing hiring decisions, HR, all that stuff.
And let's not forget about likes to do yoga, doesn't like to travel much, doesn't like to surround himself with a lot of people, gets a little bit claustrophobic.
He's a man of routine. He eats Special K with blueberries every single morning. He has a cat, yeah.
Tom, Stephanie raised an excellent question. How much money
is
going to follow Bill Gross to Janus? Well, whether it's new money or whether it's Pimco money, because you are going to be here. I did some math. I know that scares you. But if you think about it this way, okay, up until yesterday, Janus equity, shares of Janus were trading at about 1.175% of Janus's assets under management.
Right.
That's the way asset management companies trade, as a percentage of assets under management. They have a new market cap today, thanks to the Bill Gross news. The stock is up some 35%. If you do a little bit of math, you come to the conclusion that the market is implying, using that same multiple, that Janus is going to have $235 billion of assets under management, makes Bill Gross a $60 billion man.
Yeah, that's very much a legitimate mathematical calculation. I think the idea here is he's a marquee name. John Bogle said that this morning, Marty Fritzen, Margie Patel, and others. As Marty said, this is a true rock star. 70, a couple tough years, but yes, he can bring in new money. The moving money is a fascinating question. A number of the interviews we had made clear retail could move.
Okay,
the little investor
if he's
could
the
move.
bond king, the guru, the expert, why leave and go to Janus? Why not leave and start his own fund and go hedge fund style and collect the 2 and 20?
I think, first of all, in the bond market, that's a much tougher proposition than in the equity market. But so much of this, as Sheelah alludes to, is a lifestyle.
Why? There's a ton of credit hedge funds. There's a ton of macro funds.
That's not what he does. Bill Gross works the full faith and credit market. It's a different racket than the hedge funds. I go to where Sheelah is this is a lifestyle move. He wants a much smaller.
But hold on, I disagree. I think that he's the biggest player in the credit markets. He, without a doubt, could start a credit hedge fund.
I think there.
So, I want to chime in here with a couple of thoughts on this. Okay, first off, why Janus, right? Well, it is a chief rival to Pimco, but also there's a relationship between Dick Weil and Bill Gross that goes back many years.
Yes.
Dick Weil was the Pimco COO for several years. And so sources are telling me that in many ways this is a classic Bill Gross move. I mean, this guy is not interested in leaving and sort of quietly going away. He had something to prove. He was being pressured to leave Pimco. His behavior was getting worse and worse at the company.
There is a good question as to why Janus. Janus, while certainly a rival to Pimco, has been something of a pathetic rival to Pimco in as much as Pimco manages almost $2 billion. No, but hang on, Tom. Pimco manages almost $2 trillion in assets. Janus, which is historically a growth equity business, manages $177 billion. We're talking about 10%
I would go back to
of the assets.
Sheelah, I would go back to July of this year, where Janus announced they're taking on Myron Scholes, the Nobel laureate. That's people that Bill Gross likes to be around, likes to hang out with. It's not a small idea that I was literally one day at Pimco and Michael Spence walked through the hallway.
Well, Pimco is structured like an intellectual sort of hothouse where they really value the exchange of ideas, and that is something that Bill Gross loves. Now, of course, there has been some turmoil there in recent months, and there are folks there who have reported to Bloomberg and other outlets that he wasn't necessarily dealing with contradictory points of view very well. And all this turmoil made it into the press.
That's a very nice way of putting it.
Yes, there was a range of
And to that point, Doug Cass this morning wrote a scathing note about Bill Gross at 70. That, you know, and everyone knows I'm quite close with Bill. The fact is, he's 70, he's down the road on a career, and all reports are it's been an immense challenge to run Pimco for the young Mark Kiesel and the
what about
others.
the possibility?
And that was left, by the way, to Mohamed El-Erian to run the company, and then look what happened. They butted heads, and El-Erian left, and there isn't any indication that he's coming back.
What about
El-Erian's job? Hold on, just so people understand, El-Erian's job there, and what was Bill's job there?
So Bill was the one who, and Sheelah, you know this, I mean, he's the one he wanted to run the funds, he wanted to manage, he was the big thought leader at Pimco. Not that Mohamed El-Erian was not himself, but he was really out there in the press. He was sort of like an ambassador for Pimco, but he also ran the operations at the company.
But Bill was the investor.
CEO, right? And Bill, as we all know, Bill Gross is not an operator. He is not a CEO.
We have a piece of breaking news to inject into this conversation. Our sources, that is to say Bloomberg sources, are telling us that Dan Ivascyn, one of the deputy chief investment officers appointed in the wake of that fracas that prompted El-Erian to leave, is likely to succeed Bill Gross as the chief investment officer. And that isn't going to surprise too many people. Ivascyn certainly had to be among the front runners. Mark Kiesel also named as a potential successor, as well as Scott Mather, who has been running the global business. But the nod appears to be going to Dan Ivascyn.
I've heard that name as well, by the way, this morning.
Do you know Dan?
I met with him when I worked on my piece for Business Week. He's very impressive, very well regarded, and although they did promote a number of people around that time into the sort of chief investment officer role, and they were clearly taking steps to plan for the moment when Bill perhaps stepped away for whatever reason, Dan's name was always at the forefront. He's a very, very respected
He has a huge job ahead of him, does he not? We talked about the possibility that retail money will exit Pimco's total return fund that grows managed right away, and the retail investors can do that. Institutions, on the other hand, and so much of Pimco's money is institutional money and not reflected necessarily in the total return fund, is subject to review, right? Every single institutional manager now has to initiate an asset allocation review and decide, and it's going to be a process of time, whether to keep the money at Pimco. And Ivascyn, presumably, is going to be the man at the front lines trying to keep the money from walking out the door.
I would suggest that we've seen this many times before, not only ugly times at Putnam when it blew up 8, 10, well, more than that, 12, 15 years ago. But I go to American Funds Capital Guardian Trust in Los Angeles when Mr. Lovelace moved on. There's a hierarchy shift, and you manage this. Ivascyn is the kind of person, that's what he gets paid for, is to herd the cats. Not that that would ever happen in television, but herd the cats and you know, get everybody in order while still hiring intellectual firepower. That's what Mohammed did.
Yes, well,
Mohammed got the horses.
That's right. Well, Mohammed was involved in investing, but basically he would split his day. He would come in ungodly early, do his sort of market analysis, write whatever op-eds he had to write, and he would sit on the trading floor until around 9 a.m. right next to Bill. And then at 9, he would move to the executive suite and do his management duty. And that was the part that Bill really did not like to do.
This is the second enormous job opportunity in 2 days that's come up where Mohamed El-Erian was a potential candidate, right? Running the Harvard Management Company, which he once did, and it was thought perhaps he might return, and now Pimco, which he obviously once ran as chief executive officer or co-chief executive officer.
And
way to undersell, Erik. Maybe he doesn't want to do either of those because he loves being a Bloomberg
Well, I would point out.
I mean, are you kidding me, Erik?
By all indications, he is happy with what he's doing right now. He spends half of his time at Allianz, not on Pimco stuff, but he's working on other things at Allianz, and he's happy to be working and doing the things that he said he wanted to do, which is spend time with his family.
Very quietly yesterday, the Telegraph in London had the article on his 10-year-old daughter, where Mohammed finally discussed
right now. Yes.
Discussed the idea that this was about his family and we all know the crushing hours. I mean, you look at Stephanie Ruhle's 35-hour work week; it's almost as bad as Mohammed's.
Please, I'm working 35 hours a day.
Okay, 37.
You know what's so interesting about that is he wrote this article for Worth magazine. This is what we're talking about. He wrote this article for Worth magazine speaking about his work-life balance and spending time with his daughter 3 months ago. And now in Europe, for some reason, the Telegraph and the Guardian, they suddenly picked it all up, and he's now trending in Europe now as this sort of beacon of work-life balance.
Sheelah, I have a question with your recent reporting on Pimco.
More of a work-life balance.
Exactly. They're just working too hard over there.
They are.
Is their acclaimed morning meetings still the same? I have trouble. I've had the privilege of being in it. Bill not there, Mohammed not there. That's a different morning meeting.
Well, there were some complaints internally that if Bill or Mohammed or both of them or one of them were there, that it would have this sort of chilling effect because everyone else would feel a little intimidated about speaking their mind and possibly offending one or the other of them. And this is something Bill spoke to me about. He said that he felt like there were two pillars and they were a little too authoritative, perhaps, and that the power balance wasn't fostering the kind of intellectual mix that they
and Marty Fritzen today, who's an acclaimed fixed income manager, said this is a real distinction and that Bill Gross had a huge belief and call on macroeconomics, which folded over tick by tick to the sweat of trying to make alpha. I mean, he brought the economics world right into finance, and that always is contentious, always.